Good morning, everyone, and welcome back to another episode here of the Broker Breakdown with myself, Mike, and James, as always. Super excited. Welcome back for another episode here. We have some super current information regarding an episode that I'm excited to record here today on rental properties, a little bit dabbling in some investment rentals and how that kind of affects insurance, along with how as a tenant, you should have insurance as well. So some pros, cons, things to discuss. So a really current and relative topic, I would say, James, to what we've seen in the property kind of insurance landscape over the last couple of years.
Yeah, I've been getting a lot of questions about it. And again, I do a lot of commercial stuff myself. So I have been getting a lot of questions and kind of just trying to educate people a little bit more and give them a little bit of knowledge. The biggest thing that I'm always getting is that people are almost on the renter side of things. People are very unaware that if you're renting from someone and they own the property, that they don't need insurance, but it's actually the flip side. And we'll get into more of this in detail, like as we get along into the episode. But I find that's like one of the biggest misconceptions is that when you're renting, you don't need insurance. But I actually think that's almost like the perfect time to get insurance, not only for the short term, but the long term of things. And like I said, we'll get more into depth with it. But yeah, we kind of saw a little bit of a need in the market right now that a lot of people are asking these questions about renting and owning rental properties and what are some important things they should be looking at. So we definitely kind of wanted to make an episode that kind of geared more towards those kind of topics.
Yeah.
I think first we wanted to dive into the actual rental side of things. So like if you're actually owning the rental property, and then later on into the episode, we'll get into the actual renter side of things if you're renting that property, and just kind of, like I said, going through some coverages and things that you should be looking for and why these are super important to have.
Yeah, rental properties now, I think more than ever, it's such a common term, right? Whether you own one yourself or you're just a renter in that space. I mean, there seems to be a massive amount from a buying perspective of people always calling in for, investment property and rental property insurance, James, too, right? Like, I know, there used to be a point where not everyone had rental properties. I feel like now there's a lot of investors out there, that want to turn homes into legal duplexes or even multi-unit kind of residential buildings. And people just love the ability of, having investment properties, rentals, and cash flowing them, right? It's a super current thing right now for sure.
Yeah, I think it's always been there, but I think now in the market that we're in, a lot of people are going that investment property side. And like I said, they're having 5, 10, 15, 100 properties, right? So it's very important to obviously make sure that you are covered properly in the event of something happening. But again, like I said earlier, from the rental side, like you want to make sure if you are renting a property, you have the right amount of coverage, because like the misconception, like I said, is that a lot of people think when I rent, the landlord is going to take care of everything. They take care of all the damages. They take care of basically anything inside the home, outside the home. So, of course they would take care of the insurance side too. But again, that's not the case. The landlord insurance doesn't cover everything from a renter's perspective. So as a renter, you want to make sure that you have the coverage, and we'll get into that later on in the episode. But again, just kind of something to think about as we kind of dive into this a little bit more in depth.
Yeah. So rental properties in general, right? The insurance aspect of them, as a person that owns the property, I mean, there's a couple of different coverages that are more relative to rentals, James. I'm not sure if you want to jump in on that part first.
I think the biggest one's obviously just going to be the building coverage itself as the person that's owning the property. Just like if you're owning a regular home, you obviously want to have building coverage on it. So again, kind of going through the steps, like how it was made, square footage, stories, kind of the bare bones of what a home is realistically. So like how the plumbing is, the electrical, heating, that kind of stuff. And then basically from an insurance standpoint, we basically determine what the rebuild cost of that building is going to be. So that's a very, very straightforward one. Just like if it's your home and you're living in, you still want to have building coverage, because again, in event of a claim, water, fire, wind, anything like that, you want to make sure that if there's a complete loss or even like a 50% loss, you want to make sure you are having building coverage to basically cover for anything claim related.
Yeah. And there's a section underneath that. So very similar to that of home insurance, as your primary kind of occupancy goes. With rentals, there is a spot for contents coverage that you as the landlord, like the building owner, can make sure you have enough of. Typically people will say, I don't need anything. It's all the tenant stuff. But keep in mind, things like appliances, for example, are still like, if you own those and they're using them, they're still your responsibility to insure. So I'll use the classic example, the washer, dryer, fridge, stove, microwave, all of these things are still appliances. They're still contents. So those are not, just because they're in the home, those are not paid out if there was a claim under the building structure. It's going to be under the contents amount. So you don't, as a landlord, you certainly don't want to scrap that completely and say, hey, my tenants are bringing everything with them, so it's their responsibility. A lot of places still, you might provide that stuff. And actually, I'm pretty confident if you have like damage, to like even like your furnace or hot water tank, things like that, those are still covered under contents as well, James. They're not that's not the building coverage that protects for those.
I would even go as far as saying that even things like a lawnmower and like a snowblower, if it's kept at the property, as the property owner, like let's say the property owner has an agreement that they basically are going to like shovel the driveway or cut the grass for the rentals, then even those things, if they're staying on the property, they should also be included under your or under your content side of things.
One of the things too that's super important. So I mean, contents is the one thing. And a lot of policies might have a general amount. Like you might want 12 or 20 grand or something like that to cover incidentals for yourself as the landlord.
Yeah, very flexible. Most companies will just basically ask you like what your amounts are going to be. Again, like because it is a rental property, a lot of people don't really keep a lot of stuff there other than appliances. You might get the odd rental property that rents with furniture included, so you might have to include that as well. But it's very flexible. Every company is going to basically ask you for an amount, and you'll basically just give the amount that you want to have covered under.
Yeah. And I'll throw it back to you in a second. But before I lose my train of thought here, there's a section under, again, kind of rental properties or rental insurance as we go over it, that is for basically loss of rental income. So I'm not sure, James, if you were going to pick up on that, but I'll do a little self plug there that even if you're renting it out, and I know rent is super high right now in Southern Ontario for the most part. I know that's been a huge discussion for the last couple of years. But one thing that you don't want to overlook is if, let's say, you did have a loss to your property, and I'll use a fire loss as a worst case example because that's really going to impact your lifestyle. If your tenants can't live there for a couple months or a year, if there's being like damage that's being repaired, the loss of income or kind of that fair rental value coverage, whatever the terminology is different from every company. It helps protect and pay for that loss of income that you would be getting if the tenant was in there for that amount of time. So I think it's super important to highlight that now because, a lot of rent is not $1,000 a month, right? A lot of places are 16, 2,000, over 2,000 in a lot of cases, depending on what type of place you're renting. So I mean, if you're out of that place for, let's just use a year as a really, hopefully not, but worst case scenario, I mean, that's upwards of 20 grand that you've lost as the landlord, James.
Exactly. Yeah. I find that is a huge coverage that a lot of people don't really talk about or actually don't even know that they have in the event of a claim and obviously the renters can't live there anymore. You want to make sure you're covering yourself because if you basically just have a vacant home and it's not making you any money, at the end of the day, like, that's not very good investment for yourself and your business. So you want to make sure that you have that coverage in place because at the end of the day, obviously we don't want to have claims happen, but if they do, then we want to make sure that, again, you're still keeping or at least making money off a property instead of just sitting in there vacant for who knows how long it could possibly be vacant for. Again, if water and fire claims, you could be vacant for 6 to 12 months, depending on how bad that property damage is, right? So,
nowadays, especially, sorry to cut you off there, but the big thing that I think people are not necessarily thinking about now is that with, overall material shortages and labor shortages for the whole entire process, that 3-week or 1-month project, maybe there's things you can't get in right away, right? Or you don't want to pay what it is. So maybe it ends up being longer than it should, right? So there's a whole other element right now of delays that adds to maybe how fast that project gets back up to get you back to what happened before the claim happened, for example.
Yeah, we talk about it every episode, the supply chain shortage and how we're still going through the kind of hiccups that we're having with that. So again, yeah, you could have 5 years ago had a claim that might have lasted 2 months and your tenants are back in, where nowadays you could be 4-6 months with the same kind of claim, just because of depending on material and how fast they can get it to you and the availability of it. Those are all changing circumstances that really change day to day, week to week, month to month. So again, making sure you have that coverage in place, because as an investment property, you definitely do not want your investment property just sitting there vacant for 12 months or however long it might be, and you're literally making $0 from it, because at the end of the day, that's just basically money that you're spending to make nothing back on it.
Yeah, and the element of this too that we should highlight is that people are always concerned. I know insurance, it always comes down to the money of what you're paying. Most insurance companies, if you're in that area of, let's say, between $12,000 and $24,000 of rental income coverage, it might cost you, $50 for the year, $100 for the year. When you actually break that down about what you're paying for that per month on that rental property, it's literally peanuts in comparison to what you get back if something bad happens. And insurance is there for those, catastrophic claims that you can't come back from. So for all investors listening, or anyone that knows investors, ensure you have that on there. Again, it's not a lot of money. It's a no-brainer in my opinion. I think
some companies actually include it.
Right. See, and that's one. Yeah, right. It might even be included.
Yeah, some companies include it, and then other companies, like you were just saying, it's very, very minimal premium. But you're not looking at hundreds of dollars for that. Is I guess no,
the point.
You're looking at like maximum. I believe I've seen companies at $100 a year, so less than $10 a month to have that. But I think majority of companies now are just including it into their coverage as a rental property.
Yeah, it's a big thing, and I just wanted to highlight that before jumping on to the next thing before we forgot about it.
100%. Kind of doing a little bit of a backtrack here, kind of pertain to the building coverage side of things. One thing you want to be very, very aware of, because a lot of people might get the misconception that because your home might have this coverage, your rental property might not. So it is a guaranteed replacement cost. So basically, in very English terms here, very simple terms, basically they're going to replace the building exactly how it was prior to the claim, no matter what the cost is. So no matter if the building limit, let's say your building limit's $500,000, but your claim is basically going to come out at $550,000, the insurance company is still going to give you and still going to repair the property back to how it was prior to the claim. With rentals, not every insurance company offers guaranteed replacement costs on rentals. So you want to make sure that when you are looking at your insurance, or your broker or agent, whoever's doing your insurance, you ask them the question that, hey, does this rental or does this insurance company offer guaranteed replacement cost on my rental? Because like I said, not every insurance company is going to offer guaranteed replacement on rentals.
Yeah. And you know what? A lot in the past have not, right? You're going to get...
We're just starting to grow and see that change, where companies are now starting to be like, well, if we offer it on the home side, why aren't we offering it on the rental side? So you're starting to see that change. But like I said, it's not fully there yet where every company is offering it. Maybe down the road you will see that. But again, a very, very important coverage to have to make sure that you are protecting your property at the full value of what it is.
Right. Well, or at least at the very least, again, whoever you're trusting for your insurance on these properties, whatever it's through the agency side or the broker side, or whoever you use, it doesn't matter. The biggest thing to note is that as long as you're happy with what the insurance to value is for it, so basically if it's 500 and it should be 500, then you're happy. Just making sure it's not underinsured. Again, that's the same thing we would say on a home policy. But I think it's even that much more to note than on rentals. You don't want to undervalue that from an insurance perspective.
No. And the biggest thing I want to point out here is the difference between rebuild and retail value. The retail value of a home is highly, highly inflated compared to what a rebuild cost is, because you have to factor in, when it comes to rebuild, we do not factor in land costs, which a lot of properties nowadays are inflated because of what the land that they sit on costs. So like these bigger cities, like your Torontos, Mississauga, Oakville, like those areas, the land almost costs, I would say, almost double what the actual property costs to rebuild. So make sure that you're not getting those two confused. There's two completely different standpoints on that. What the real estate value of a property might be and what the actual rebuild is going to be of that same property.
Yeah, I got nothing else to add there. That sounds pretty close. I think people over one of the common things I always talk about is how, whatever the current market is, keep in mind when we do this quick evaluation, which takes a minute, you're going to see a different number on that.
I was literally just about to say that every company is going to give you a different number because they factor in different things. That number is going to change year to year as inflation goes up, the supply chain changes. Like realistically, there is a little bit of a connection between the real estate value and the rebuild value. Obviously, if real estate value is going to go up, so is the rebuild cost is going to go up a little bit as well. So again, with the market how it's been, we've really seen the last probably even 10 years, we've seen that the rebuild costs of homes have just continued to go up. And again, that's reevaluated basically every year on your renewal. So always taking a look and seeing, because again, every company is not taking a full glance at these things. So there's minor increases every year. So making sure that your stuff isn't underinsured is very, very important, because again, I've seen people or clients that have been with companies for 25, 30 years plus, and the rebuild costs on their home or rental property has not increased enough to where it should be in the market. And that obviously is going to drive what your premium is going to be on your home. So I get a lot of questions of, my rebuild cost has gone up, but so has my premium. Well, of course it has, because again, that's a big driving factor into how we rate for home and rental properties is obviously going to be the rebuild cost.
Exactly. And quick segue from that into something I wanted to mention on rentals, kind of the difference between being that tenant and being that landlord. So in basements, one common thing that you always buy is kind of water protection, James, sewer backup. There's a couple of different names for it depending. I think it should be noted that typically you can buy that same coverage for your rental investment property. And if you have a basement below grade, I would always strongly recommend ensuring that, you do have this on your policy. Again, we've made that type of note, and I would make that recommendation on anybody as their primary residence, but I would make that exact same recommendation on a rental property, making sure that you have water coverage for the basement, especially considering a lot of people that own rentals finish those spaces for, another family to live in, or whether it's you're renting out the entire house. You're still responsible for ensuring that basement and that water damage. And even though your tenant is renting it, if there is a water claim, this is where I know this is jumping ahead maybe just a slight bit, but you as a landlord, you as the building owner, you're going to be responsible for the damages to your actual house because you're the one that insures the house. The tenant is only responsible for their contents because it's two different things. So again, that's the quick side note is just making sure that your policy from a rental perspective has the water or sewer backup coverage for the basement. If you can get it and if you want to pay it, obviously there's difference in rates, but if it's available at a fair value to yourself, I would, again, strongly recommend you always have that, because if there is a water claim in that house, again, your tenant's probably going to have to leave. At that point, you're looking at whatever those damages are. You don't want to have to pay that out of pocket, basically.
Yeah, and that's the biggest thing I hate hearing from property owners and rentals is that, I've never had a claim in water. I don't need water. I live up on a hill. I live on sand. I live on gravel. This is never going to happen to me. At the end of the day, anything can really happen at this time of day. Our climate has changed so much in the last 10, 15, 20 years. Things we've never seen before are happening, especially with water. So you want to make sure you're properly protected. On the renter side of things, again, the misconception is, like we were speaking to earlier in the episode, that just because the landlord has insurance on the home does not mean that in event of a claim that your contents are covered. You would be surprised and shocked at how many people I see on my social media in the news that, for example, Mike, an apartment fire. Again, there's obviously like condo corps and apartment owners obviously own those, but there's a fire or there's a flood in an apartment building. And again, with so many units, there's going to be so many different unit renters that are going to be impacted in this. But you'd be shocked of how many people that I see on the news and on my social media that aren't covered for contents insurance or renters insurance or however you want to term this. Yeah. And again, it's really sad to see that a lot of people, because they don't have this kind of stuff, they turn to crowdfunding and GoFundMe accounts because they have to basically replace their whole life because there's been claims and they lose all their furniture, all their belongings, all their clothing, all their electronics, and they didn't just have the insurance to cover it because they thought, oh, well, the building's covered by the apartment owner, or the building is covered by the landlord of this home. I should have coverage, but you don't. So it's very, very important to know. And like I said, segueing into the renter side of things to making sure you have the right coverage, not only as the rental owner, but as the unit renters as well, is super, super important.
Yeah. And you know what? I think as we kind of progress, where more buildings in general, like I was just having a conversation with someone about this last week where we were talking about, everybody gets auto insurance because you physically have to have it. You have to go to the ministry. You have to do things. You have to prove insurance in order to do it. And it's just a common knowledge. You do not drive without auto insurance, right? Like it's a thing that it's ingrained in everyone's head. Rental insurance or renters or tenants, whatever you want to call it, hasn't gotten there. But I think that's part of the problem is that historically, individual landlords, so if you own a detached home, or if you own, let's say, apartment building, whatever you own, if you don't require people to get it and show proof of it before they move in, for example, then people don't necessarily know that they need it, right?
Yeah, they don't. There's no importance to it because you're not putting an importance to it as the renter.
Right, right.
As the rental owner, you should be putting so much importance on them having insurance because, again, it's spreading the liability for things. Before we even went live with this episode, we were talking, and I said, you know what? An event, especially now with like the weather how it is, in the event of a trip and fall and someone getting hurt on your property, a good lawyer is going to not only name obviously the landlord and who owns the property, but they're also going to name the person that lives there. So you want to make sure you're spreading the liability properly, because in the event of there being a lawsuit, you don't want to get a court order saying that you were named even though you don't own the property, but you didn't have insurance, and now you're basically going to be fighting a battle that you don't even have coverage for, which you could have.
Yeah. Well, and there's a part of that too, where as a building owner, right, you're responsible for protecting basically against anyone that comes there. So it could be friends or family. It could be your tenants having people over. It could be anyone else that's being invited. It could even be a trespasser, for example. Your insurance policy, as a property owner, you're responsible for taking all due diligences to protect from injury or property damage as well, right? So, like handrails on railings, there's things that insurance companies would love to see that obviously prevent loss from happening. Because if there is a slip and fall, and we'll use that as a general example because it does happen, slip and fall claims could turn into lawsuits, right? That's bigger. That's money the insurance company is paying out. So it's so important to have, the right coverage in that, James, because as a tenant, you're just as responsible for ensuring that the people that you're inviting over, you're kind of in essence taking care of them. But if something does happen, you have that, let's just use 1 or 2 million liability, whatever you decide to have, to protect all those legal actions at that point.
And you'd be surprised of how many times you'll see this, but people are like, oh, my friends and family would never sue me for something. The problem is when money's involved and injuries are involved, you'd be surprised of how far people will go. I see a lot of the time, and this is majority of the time that people are making claims like this, like injuries at homes, is either friends or family. It's never like random people, like workers, like mail people or whatever it might be, delivery services. It is majority of the time friends and family. So even if you're just thinking, you know what, I'm not going to get this because my friends and family would never sue me for something like that. Again, I would really second think that and realize that, like I said, majority of the claims that are coming through on this side are friends and family that of the actual insured.
Well, and there's I mean, I've heard it before from people over the years where it says, you know, you're not actually suing your family, you're suing the insurance company for money, which does hold merit because that's actually technically what you're doing. Even though you're not technically going after your family, you are, right? in a sense. But yeah, I mean, if you don't have that coverage, what happens, right? Sort of thing. Like those are the questions. That's really the reason you have it.
Exactly. But yeah, like I said, kind of segueing into the renter side of things. I think the biggest one, Mike, I don't think we even have to argue this, is obviously the content side of things.
Well, there's two big portions, right? Really, it's contents and liability, but your contents is, I mean, how many people would want to lose your $20,000, $30,000, $40,000 of stuff that you have in your basement? Could be more.
Imagine you losing your golf clubs.
Yeah. Well, I mean, it'd have to be need a lot more myself to put one in. But if you lost a bunch of stuff, I don't necessarily think the average consumer knows how much stuff is worth to replace, right? Because when you've owned it for so many years, it doesn't necessarily have a value to you, or you don't think it does. However, when you have to go and replace an entire, furniture set, for example, or everything in your kitchen, like it adds up. Those numbers add up. And unless you're going to just go garage sailing again and pick it all back up, replacing all that stuff in a claim, you're going to do, and it's going to cost you.
Like, for example, I'm just going to use this. Let's say a family of 4. Let's say they all have iPhones. Those iPhones are minimum $1,000 now. They all get stolen or damaged or whatever it might be. There's $4,000 right there in just phones.
Yeah.
Like, how insane is that? Just in phones is and it's probably more than that. I'm being very conservative. It's $4,000 in just phones to have to replace if there's damage or theft or whatever it might be. So just right there alone, that's huge. That's not even considering things like TVs. That's not even considering like gaming consoles, which again are up there in price. Like all these things are obviously going to be like widely like targeted in event of a theft or like, again, like a claim like fire or water or whatever it might be. But just right there, like in electronics alone, like if you're talking just those things, like you're easily in the tens of thousands of dollars just right there in electronics.
Yeah. The big thing is we have to take the mindset that as a renter in a unit, whether it's an entire house, an individual unit in an apartment building, or a basement somewhere, could you survive with all of your stuff being stolen or damaged? And if the answer is no, like if you can't just kind of insure it yourself through the money you have in your bank, getting a renter's insurance policy for a couple $100s a year has got to become a no-brainer. Now, unless people tell you that enough, it's not going to necessarily sink in. Because I know that before I was in insurance, I didn't have that at a couple of different units because it just wasn't widely known to me at the time. But it's got to become the norm. So maybe if anything, James, some people can, if it's investors thinking about it or landlord or whoever has a property, we got to start ensuring that people have renters insurance.
Yeah, because even just thinking from my side of things, like the amount of stuff I have, like my gaming stuff, my like golf clubs, clothing, electronics, TVs, that kind of stuff. Like I don't think anyone can really sit there and say, you know what, like if all this stuff was damaged or stolen, I'd be able to pay for it all the next day and have it all replaced. Because I don't think anyone could. No, I really don't. So
not the average person by any means. Maybe a small percentage that's like, I'll take the hit myself, but that's like 1 in 100.
And again, like you were just talking about it, how you can kind of like bundling it with your auto insurance. I know we talked about this last week actually as well, but bundling it with your auto insurance, like it basically, like there's times where it actually offsets the cost of your auto insurance, and you actually will pay less money with some insurance companies to have both auto and tenant insurance than you would have with just the auto insurance. So right there, I think is almost a no-brainer. Why wouldn't I pay less money to have two coverages instead of paying more money to have one?
Yeah, exactly. The discounts, I know we touched on them last week, but the discount, depending on how much you're paying for auto insurance, can usually offset it, if not a little bit more. So you're getting basically renter's insurance for almost free, if you want to think about it that way. But yeah, the discount's the big selling factor. And then the other aspect of a renter's policy that's super important is that liability side, which we briefly just touched on, which is as a renter, you're still responsible for basically protecting those friends and family that come over, right? So they come over. I'll use the general example. You leave a pot on the stove, for example. It causes a fire. The unit has now fire damage, or the unit has burned down, or whatever the case may be, as a worst case scenario. The landlord then comes after you, in essence, to basically say you caused the damage to my unit, to my building, to my home, whatever it might be. So they'll probably put a claim through their insurance to help repair the damages, but that the insurance company behind the scene wants to subrogate against that wronged or wrongful party, in which case you, as the renter. If you have tenant's insurance, you then have your insurance company there to protect you from that, to help pay for those damages. If you don't, there is the possibility that you could be on the hook for that if you're personally responsible and negligent in those acts. Now, I mean, we don't necessarily see the claim side. We're not adjusters. We've mentioned this multiple times, but that's kind of how the system or how the progress would go if there was a claim that was, unfortunately, of that catastrophic nature. But it's important for everyone to know that that could happen if the process unfolded like that.
I would love to see kind of how this kind of plays out, because this is kind of the recent news. Did you hear about the guy in Milton that basically killed that guy that basically broke into his home?
No, nothing on that.
I would love to see kind of where that goes in the insurance side of things, because again, like, I don't know the whole backstory of it, but like basically someone breaking into your home on your premises, but then you kill them. Like, how is that? Like, I would love to see kind of how that plays out in the insurance world, because again, technically, he was the person that was killed. It was obviously like killed and injured on that person's premises. So could there be enough there to make a claim for his family to basically sue that person, obviously, for wrongful injuries?
I guess it's all the legal system at that point.
That's the problem. Like, how, like, it's, I don't want to make it, like, get very political, but like that would be a very interesting thing, and a very obviously like worst case scenario. But like, even if you like tone it down a little bit, let's say, for example, Canada Post is delivering something to your house and they trip and fall and that person gets hurt, then what happens? You know what I mean? Like I was saying earlier, a good lawyer is going to not only sue the person that actually owns the property, they're going to sue the person that lives there as well. So you're basically going to both be named on a lawsuit. And again,
there's a lot of stuff to that too, right? Because depending on the weather, I'm pretty sure most cities have bylaws on how often you have to clean, sidewalks and your driveways and stuff like that for especially like government employees. I don't know what those are. I guess everywhere would be different, but that's all. I guess it would all depend on the legal side and what precedence has been set before in cases like that.
My biggest thing and my biggest point was going to be, don't put yourself in that situation.
Yeah.
I would really just, like I said, from all these benefits that you're going to get, I would really just not put yourself in that situation where you're risking it and having something happen and then be like, oh, you know what? I need this now and you can't get it. I would literally just go get it now for the few dollars you're going to spend monthly, for the offset of the discount you're going to get, the additional coverage you're going to get. To me, it's a huge no-brainer in my eyes.
And there is another point on that too, that a benefit to you as a client. So if you get renter's insurance and you've had it continuously for a couple of years, for example, and then you'd end up buying a home, that same insurance company or others could possibly give both loyalty discounts and claims-free discounts when you buy your first house.
Great long term.
You don't necessarily, you don't necessarily need to just start getting it when you own a place. Getting it before has these benefits, which then makes you
pay less.
Well, you're going to pay less, but you're also then a better client because now you have insurance history for those other markets because every insurance company views a client differently as well.
And again, let's make this very clear. Because auto insurance you legally have to have, home insurance is kind of a very gray line. Because if you have a mortgage on your home, then you have to have it because the mortgage company obviously like to release the mortgage, release the home, that kind of stuff. You have to have it. But technically in Ontario, home insurance and tenant insurance is not legally required. So technically insurance companies don't have to offer you it. But again, if they look at you and said, you know what, you've been renting for 10 years, now you're going to buy your first home, that they're going to be more inclined. And again, they're going to be more inclined to give you better rates because you've had tenant insurance. Just like auto insurance, if you've been driving for 10 years, you're going to have a little bit of a better rate than someone that has only been driving for 1 year. So for the long-term perspective of things, having this kind of policy is, again, a no-brainer because future you is going to really look back and be like, you know what? I really am happy that I've had this insurance for the last 5-10 years and I'm buying this home because now my home insurance is very affordable, which I thought it wasn't going to be because I had tenant insurance and I had no idea that they coincided with each other and I was going to get a break down the road. So future you is definitely going to applaud you if you have tenant insurance as a long-term plan on owning a property yourself later on in life. Yeah,
exactly. So, I mean, to highlight the two different things, because I know there's a lot of different material being talked about, you know, landlords and people that own investment properties, super important to make sure some of these things are highlighted on your rental itself. And anyone that is renting on that tenant side, super important to make sure you have contents and liability, you know, and you just don't want to be in that case, basically.
Yeah, like I said, at the end of the day, why you put yourself in a situation you don't need to be in? Realistically, a lot of people, a lot of clients, the biggest thing is going to be the premium side. Look at it, you get a discount for it. And like I said, depending on how high you're paying for your auto insurance, most of the time, you're going to see a massive offset of how much the discount's going to go down and how much your actual tenant policy is going to be. So to me, that's a no-brainer, especially if it's going to save you money to have two coverages instead of paying more for one. Why wouldn't you go ahead and do that?
Yeah, exactly. Was there anything else too, James, you had for this?
Nope. I think that was good. I think just kind of recapping the rental side, again, making sure you know what your building coverage is, making sure if you have guaranteed replacement costs or not, because like I said, a lot of insurance companies don't offer it on rentals. The big thing you said was rental replacement or income replacement. So making sure that you have replacement cost on your income on the rental in case there is a claim and there's obviously no one living there. Obviously, you don't want to have a property not making you any money. The content side of things as the rental property owner, again, appliances, furniture, that kind of stuff. If you are renting it out furnished or have appliances, you want to make sure you have coverage for that. I think just kind of a good kind of sense of business, making sure you have proof that your tenants have insurance. Because at the end of the day, you want to make sure the liability is spread properly.
There's a couple of things too that I just thought about that'll be beneficial when you have like a rental property and it's vacant, for example, before you've gotten tenants in. I know a lot of people are in this position right now because, you know, rent is so high and you're trying to find the right tenants, and there's a lot of you're trying to find the right people. If you have your property vacant, ensure you've told your broker or agent right away for a couple of reasons. One, if it's vacant for more than so many days, you're going to want a vacancy permit on there, which your kind of insurance representative can talk to you about. Vacancy permits generally basically saying the insurance company knows the property doesn't have anybody living in it right now, and they'll extend it for whatever number of days that could be. They usually do it, I think, monthly, and they'll continue on until it's occupied again. And the reason this is so important to let them know is because a vacant dwelling versus a rental dwelling technically are two different types of risks. So if there was a claim and you hadn't had anybody living there for 6 months, there's the possibility the insurance companies start, when the claims adjusters are getting in touch, if there was a claim, there's going to be a big gray area about when they moved out, how often have you been going by, all these kind of underwriting criteria could come up and could give you a hard time. So vacant properties are different than rental properties. Even if your plan is to, let's say, renovate and rent back out and it takes a year, you got to make sure you have the right coverage during that time period. And it's probably going to be more, to be honest. But a rental property is different. You can't just have it vacant for months on ends, even if you're waiting for new tenants. If you are, just make sure you're talking to your person.
Yeah, I think vacant properties can be a whole other episode, because I think a lot of people get that misconception that I can just basically put insurance on it as a home, but if I'm actually not living there and I'm doing renovations, technically you need to have different kind of insurance on that property. But that's a whole other talking point. That's a whole other basically that could be a whole other episode realistically, because there's so much content behind that.
Yeah, and there's different coverages available, but I guess the only way that really pertains to our rental property episode this time is that even if you have that property and you're buying it and the assumed plan is that it will be a rental, ensure that it is rented out right away, and there's people living there. Or if your plan is to purchase it and then maybe do renos, ensure you're looking at maybe other ensure that's basically discussed before making it a rental property, because that could be affected in a claim, and you might necessarily not know about that until it's too late, is the idea.
Exactly. I think wrapping things up, we do have a announcement we're going to be making next week, but we do have a guest coming on the show for the I guess it would be the 21st of March, so look out for that. Like I said, we are in talks all the time with getting more people on the show. I know Mike's been talking to a few people. I have a few people in my pocket that I've been talking to, but I know for sure our next guest, that episode will be coming up the 21st of March. So look out for that episode, because again, I like having extra people on here, like the third person on here, because again, like me and Mike obviously are going to give our insights on how the market is on the insurance side of things. But I just like I don't want to really say the unbiased, but kind of the outsider's view on things that are going on. So I like that third person on the show all the time.
Yeah, it's great to have another mind too that brings an element that's not from the insurance space, right? So whether it's like the dealers, the mortgage people, the two others that we would love to connect with, both real estate agents and or real estate lawyers, for example, because all of us are involved in that same transaction. So everyone brings in a different part of that equation for the typical, the homeowner, buyer, even a car. So it's great to have other opinions.
Exactly. So yeah, look out for that episode. I'm hoping that we get one more person in for March as well, because again, we have a lot of kind of hot leads right now to get people on. But if not, like I said, looking forward to April. We definitely will have someone for April, but like I said, 21st of March, we will announce that more into next week, because next week's episode will be more into March. So we don't want to kind of give that secret away already. But yeah, next week we'll announce that. And like I said, we always appreciate you guys tuning in and checking us out. Like I said, we're on basically all the streaming services: Spotify, Apple Music, Google, Amazon. We are on YouTube as well. So if you guys want to subscribe on there, definitely give us a subscribe, follow, whatever it might be, whatever platform you're listening to. And again, we just really appreciate you guys tuning in every week.
Yeah, really appreciate it. Thanks so much, guys, again, and we'll catch you next week.